Hello everyone. So today our topic will be for covering the quarterly growth for BSE 500. We have Karthik Damodar, the founder and CEO for Guardian, and myself Pratik Gupta and Rushabh Indekar. That will be getting you through the quarterly revenue for this quarter. So the one thing that we have noticed in this quarter is that the revenue growth has been 8% for this quarter as compared to the December quarter. The main quarter revenue growth that we are seeing is in the durable goods and the capital goods and the real estate, basically where the real estate has growth. However, there has been a very less growth in consumption part, the banking and towards the hospitality.
So if you just summarize and take a step back, revenue growth pre-corona was 2%. Revenue growth during corona was about 4%. And now revenue growth over this quarter and last quarter was about 8%.
Yes.
So, okay, so should we just pivot the table to see where the growth has come from for the last quarter in which sectors?
Yeah. So coming towards the pivot that we have, we are seeing that the revenue, as I told you, the revenue growth for consumable durables and the capital goods, iron and steel infrastructure. So basically what you see is that when the reality has growth with 12% for the last 2 quarters, we are seeing the consumer durables and the capital goods going at the same pace. However, coming towards the lower part, so in terms of the sectors which have not grown for last 2 quarters would be your power sector, FMCG, banks, agri and telecom. So these are the sectors where we haven't seen any sort of growth or minimalist growth in last 2 quarters.
Right. So that would then indicate that, if FMCGs are not growing, there is an issue with consumption.
Yes.
Right. But what you're also saying is that reality has been growing by about 12 to 13%. Right?
Yes.
Now with interest rates starting to peak up, go higher and higher, this could result in that sector slowing down as well. Right? When you look at hospitality, aviation, so those sectors have seen some of the highest growth, which also indicates that the pent-up demand post-corona, there's a good chance that that's still taking place today. Right? As that settles down, it would be interesting to see how this works out.
Yeah. But one thing that we note over here is that hospitality hasn't grown for this quarter. We have a growth of only 4%. That's only because we had a higher base for the Christmas quarter that we had. And because of that, we are seeing a low growth. However, for the last 3 quarters that we are seeing, the growth has been approximately 25 to 30%. And the next thing that we are like to point out is how the revenue growth has been our post inflation. So one thing that we can see over here is the revenue for this quarter is 30 lakh odd crores, and the revenue growth post inflation is coming around 5%.
So this assumes that from last quarter to this quarter, there's been approximately about 3% of inflation. Right? But it's still a healthy growth from previous quarters to this. Right? Anything else here?
No.
That's it, no?
Yeah.
Anything on the profitability side we need to say? So while margins are shrinking, it's not significant yet. It hasn't shown, right? Because margins on an average for the top 500 companies have been in the 10% range.
Yes.
And even now, it's approximately in that 10% range.
Yes.
Do we want to say anything on the debt side? There was nothing to show.
No.
So I think
one thing what we have, Karthik, over here is the valuation. The valuation that we have seen, although the earnings have also grown, the prices have also come down.
So these are the PE ratios.
Yes.
And what we are seeing over here is the PE ratios have been going down, and the prices have been going down, and the earnings have been going up, which is making the stocks cheaper. So 2 quarters ago, it was at about 24 PEs, and it was 26 PEs before that. And now we are down to about 21 PE, and 21 PE is what the normalized rate looks like.
Yes.
So to calculate the PE, what we do is we take the price per share and the earnings per share over the last 4 quarters.
Yes.
If we go to the quarterly revenue growth rates, what we will see is the 4th quarter, right? The first quarter.
Yeah, first quarter of.
There was a dip. And that dip was there because it was a lockdown.
Yes.
right? So what it's telling you, the earnings, when you see the PE ratio right now, is not normalized earnings. Normalized earnings would be these quarters, right?
The one with
first,
highlight.
second, and third quarters, because there was no lockdown there.
Yes.
So assume, instead of 23 lakh crores, it was actually 26 lakh crores. The PE would actually be lower than what it is today.
Yes.
So the PE is not baking that in right now, which means the markets are actually cheaper than what it looks like right now, which is quite good. 21 Ps, 20 Ps in that range is given these interest rates is quite healthy, right?
Yes.
Pre-corona, I think we were in the 22. Historically, also over the last couple of years, we were in the 21, 22. So I've seen prices fall as a result. What we've seen is that stocks have got cheaper, but we've seen earnings, revenues go up. We had another video where we were showing you the macroeconomic trend, and that didn't work out very well. It didn't show India, and essentially didn't look like India was growing very well. But what this is telling you is that the smaller companies are getting smaller or disappearing, and the bigger companies are getting stronger, which is why you're seeing this good revenue growth rates in spite of all the headwinds on the macro side. That's it for us. No?
Yeah. So giving you a summary, the revenue growth has been a good in this quarter. However, since the earnings have grown and the pricing have come down, we are seeing the valuation to be at the normalized level what we had for pre-COVID. And so this was about the top 500 companies. If you have any queries, you can reach out to us.